Hello and welcome to Vox Markets. It's Thursday, the 5th of January, and this is the Bulletin Board Heroes. Starting off with the FTSE 100, where it seems that strike action is good for the UK index. Here we've got a rising trend channel in place since the end of September. We were looking for 76.30 as a target, which we just missed the other day. I think 76.26 was the peak then, but an end-of-day close above the 76.30 level could take us up towards the top of that rising trend channel from the autumn, as high as 7900, and hopefully as soon as the end of next month, maybe even sooner than that. RSI in the right place as well, so in the low 60s, so we're not overbought. In fact, we're just limbering up. And the only negative is that if we can't break 76.30, then we do have a support line there around 74.50. But it looks as though enough work has been done here, especially after that bounce on RSI 50 that we had at the end of last month. It looks as though we're limbering up for a move to the upside. However unlikely that may be. The other point to remember, which I just want to emphasize, is that we did have a golden cross buy signal between the 50 and 200-day moving averages in the last week of last month, and normally golden crosses do deliver forward momentum on stocks and markets, but above 74.50, looking for 7900 as a bigger picture type of call. On to the DAX, and here you can see that we had the little breakout through 14,200. Above that, we're looking for obviously a retest of December resistance around 14,600, and then the big picture target here up to 15,100, which is the top of that rising wedge that we've had since September. You could say that we're in a rising trend channel there in that way, but that would be 15,500. But at the moment, we're just looking for 15,000 or so as a more conservative target. RSI around the 60 level, so hopefully just getting started after multiple tests of the rising 50-day moving average that we had last month. We break back below 14,200, then the risk is of a further test of the 14,000 area and the 50-day moving average. On to the Dow, and here we have the market also delivering multiple tests against the floor of that rising trend channel from the end of September, beginning of October, and the 50-day moving average. So that looks well tested in terms of being ready to trade higher. RSI still right on the 50 level, so hasn't actually broken above it in a meaningful way. Got neckline resistance around 33,500. End of day close above that is what we're really looking for to give us 35,000 as the initial target, and then 37 maybe over the next couple of months. Obviously sounds very optimistic, but let's see how we go. But if you're cautious, you wait for the RSI to get above 50 as a leading indicator on the Dow. Going on to Bitcoin, and here the lack of action continues. I suppose the positive thing is that we're just nudging above the 50-day moving average now, and after several days of trying, that's around 16,800. Above that, in a definitive way, i.e. a break maybe of 17,000, then we're looking at 18.5, which was the peak last month. Best case scenario target is up to 19,500, which was or is the level of the 200-day moving average, which we haven't actually been above since April. So that would be quite a coup if we can do that. Below 16,300 then risks a move down to 14,000, which is a June support line projection. So let's see if we can avoid that. But at the moment, RSI in the right place, just around the 50 level. So we just need to see that push through 50, and then we could assume a little bit of upside there for Bitcoin. On to the stocks, and the stock of the day by quite some margin is Argo blockchain. Yesterday, I think the shares were around 8p. We're looking for up to 14. In fact, the high today has been at 17.6, so that's quite exciting. That might be the end of the rally, but if we can get an end-of-day close above 14, then we are looking for potentially, as a best-case scenario now, up to 26 pence, which is the top of that triangle for September. We have filled the gap from back in October. That was at 15.5, so that could be it. But we have a momentum trade that if we break through 14 on an end-of-day close basis, then there could be a little bit more on the upside for Argo. Ideally, on any retracement, we remain above the 10 pence level and maybe, if you're keen, that would be the re-entry point for the longs. On to Alkemy, which was one of the stocks to watch for 2023, and we made good on the rebound above the floor of the gap there at £2.34 or so, the low 240, so that's a plus. Current situation is that we're looking for a break of a resistance line there, which I'm just about to draw now, so that's around the 290 level, and end of day close above that, and then we could be back on track for a move towards the 500 zone, maybe as soon as the end of next month. 50 and 200-day moving average is rising. RSI quite low, so just above the 50 level, which is just in the right place. 57 is almost the magic number for RSIs, leading indicator on the upside. And early and end of day close back below 230, really delaying the upside scenario. Next up, a stock which is not quite so exciting, but had to cover it today because of the charting position. Bit of bullish divergence there for Argos Resources, bouncing off that support line there from June, and above the 0.9 pence level, looking for 1.5, which is basically the initial December support. So let's see if Argos can come up with the goods. A relatively obscure stock next, Checkit, but with a very nice setup here. So we've had the break of the bear trap reversal, break of the 50-day moving average, sideways shuffle, which is what you've seen. Actually, we've seen that twice last month, and rising 50-day line and bullish divergence, hopefully leading the shares up to an easy move there to the top of an August broadening triangle at 30 pence by the end of the month, and ideally that would happen with no break back below 21 pence level mid-price in the meantime. Caracal is next, and here we can see rebound off the 50-day moving average. Been a bit of a tug of war here in an aggressive range between 0.7 and a penny, but the shares are backed by that unfilled gap to the upside through the 50-day moving average at the end of November and bullish divergence at that time. So that should mean that in the end we get our move towards 1.15 pence, top of that rising trend channel from April. And ideally now there's no break back below the 200-day moving average at 0.77. Slightly negative news there from Enwell earlier in the week, but interestingly enough, the shares have got bullish divergence on that that probe down to 9p that they have. Looks like a bear trap gap reversal, but we need an end of day close back above 15 pence to get the shares back in the recovery, properly in the recovery mode. 14.8, the old February support there as well. So key here that we close above 15 pence, and then we have a chance of getting up to 22 pence as a best case scenario, which obviously would be quite interesting given the contrast with the news that we have had. Back below the 11 pence level would maybe warn us that the shares are going to roll over. Great Western is next, and here we have some news today. Interesting here that we've had multiple support points here around the 0.1 pence level. Now the interesting point is to see where the upside might be, and if we look at the longer dated chart, you can see there's an October 2021 resistance line projection heading towards 0.19, so basically above 0.12, and the 50-day line looking for 0.19 over the next 4 to 6 weeks for Great Western. Itaconix is next, and here you can see a break of a trend line there from September. That was around 4.5 pence, and above that we're looking for 7 pence at the top of that rising February trend channel. Upside valid, at least while we hold above 4 pence and recent lows. Mobile streams looking a little bit more frisky at the moment as well. Here we've got the shares touching the 50-day moving average, which they haven't done since the beginning of October. So above 0.14, looking for a move towards the 200-day moving average as high as 0.23, which would obviously be quite a result. We're backed by extended bullish divergence there, and obviously the trend line break that we had there around 0.12 last month. But let's see if we can get some decent end-of-day closes, at least above the 50-day line at 0.14. RSI is broken above the 50 level as well, so that's another positive backing the share price. If you had a bit of excitement with Argo blockchain over recent days, maybe Mode is the other stock to look at in the space. We've gapped up off the lows here and off very oversold RSI levels at 24. If we can remain above that, the floor of that gap at 1.8 pence, then there's a chance at least of a little run up towards the 2.25, 2.5 pence zone, which is the 50-day moving average, and that was resistance back in October, and maybe that will come in again as resistance on any recovery. Moving along to another stock which is of interest at the moment. Here we've got Oriole Resources, which has delivered a sideways shuffle above the rising 50-day moving average, which is a great combo. We've also got bullish divergence, a bullish divergence line there from June, and we had a bear trap gap reversal, an unfilled gap to the upside in the middle of last month. So all of that suggests that we're heading towards 0.25 while we remain above 0.15, let's say, on an end of day close basis. Positive news today from React Group, and here we've gapped up, or we're gapping up through the 200-day moving average after bouncing near the 50-day line. That suggests that we're going to head up to 1.6 pence while we remain above recent support at a penny, and the time frame on that maybe by the end of next month. Tribal is next, and here you can see we've had two unfilled gaps to the upside after crashing at the beginning of last month. The view now is that, a bit like Argo, we need end of day closes above the 50-day moving average. That's at 54 pence. We can do that and maybe have a weekly close above the 50-day line. Then it could be up to the 200-day moving average area at 77 pence over the next 1 to 2 months. In the meantime, probably 50 pence is the best stop loss on that situation, but we are heavily backed by the two unfilled gaps to the upside. Just a couple of stocks to go now. First is the Touchstone expiration, where we've broken a line of resistance there from August. Support initially at that neckline resistance, former neckline resistance, 58 pence. Above that, we're looking for maybe the shares to fill their gap up to the 78 pence area by the end of next month. There is bullish divergence there, and I suppose you could also see that December lows were marginally above the July support, so that is a helpful event, as is the break of the RSI 50 level, the neutral level, over the course of the last 24 hours. Finishing off with Upland, which has continued to stretch its wings to the upside. Rising trend channel there from the beginning of September, top of the channel now up towards the 0.9 pence area. You can see that maybe by the end of next month, while the support holds above 0.6 pence, the former November resistance for the shares. That's it from me today. More updates tomorrow.